Billionaires and multimillionaires have used whole life insurance for years to create wealth while they're living. And you could do the same. Let's talk money. When most people think of life insurance, they think of the death benefit. But what if I told you that you could benefit from life insurance while you're still living? What if I told you that you could create your own bank? What if I told you that instead of taking out loans from other banks, you can actually borrow from yourself while your money still grows in that account? What I'm referring to is dividend-paying, high cash value whole life insurance. How does this differ from regular term life insurance that comes as an employee benefit at most jobs? Well, let's take a look. Both term and whole life insurance provide your family members with a tax-free death benefit. Term insurance usually covers you anywhere from 5 to 30 years, whereas whole life insurance covers you for an entire lifetime. With term, your premiums go up every time you have to renew, while premiums for whole life insurance always stay the same. Term is cheaper, whole life insurance is a little bit more expensive. Term life insurance does not have a cash value, so you cannot borrow against the policy. Whole life insurance does have cash value and you can borrow against the policy. Now that last bullet point is what I want to focus on today. With whole life insurance, you build up cash value over periods of time that you can then borrow against the policy. Now notice I said borrow against and not borrow from. This is exactly what makes whole life insurance so powerful. You can borrow against the amount you have in cash value without actually taking any money out of the account, allowing the money that is still in the account to continue growing as if it was never touched at all. Let's take a look at this example. So here we have a high yield savings account earning the current industry average of 2.5%, and it has $10,000 inside of it. Now, let's say we were to remove $5,000 from that account. Now, there will only be $5,000 left in the account to continue earning that 2.5% annual interest. Now let's compare that exact same $10,000. However, this time it's within a whole life insurance account earning 6% per year. Now let's borrow $5,000 against the account. As you see here, that $10,000 remains in the account, growing at that 6% per year, giving it the ability to continue compounding over time. As you can see, this is something like a bank account on steroids, like serious steroids, like, yeah, that kind. In fact, Walt Disney used this exact same strategy after being denied by traditional banks several times when they didn't believe in his dreams. And not only Walt Disney, but also Ray Kroc, the founder of McDonald's, used this exact same strategy as well to get his then up-and-coming restaurant off the ground. The power of using whole life insurance as your own bank comes from how you invest the money that you borrow from the account. If done right, you can essentially make $2 to $3 off of the same $1. I repeat, you can make $2 to $3 off of the same dollar. So here's an example. Say you're a real estate investor or you're looking to get into real estate. So you take money out of the policy in order to make a purchase. You buy the house and then you start to fix it up. But in order to do this, you opened up a brand new credit card that earns points because you knew that you would be spending a significant amount of money. Months down the line, you end up selling the house and making a nice profit, and then return the funds you borrowed back into the policy. You just made money from allowing the funds to continue growing in the life insurance account. You made money from flipping the house, and then as a cherry on top, you also made money from the points you earned on that credit card. You just successfully made money 3 different ways off of the exact same dollar. Now I know what you're thinking. Rashad, this can't be that great without any drawbacks. And yes, of course, there are always cons to any pro. So let's take a look at some of those drawbacks. The first drawback is the cost. With whole life insurance, your monthly payments will be a lot higher than they would be with simple term life insurance. Secondly, it does take time to accumulate meaningful cash value. So this is not a good strategy for those looking for short-term results. Thirdly, this is a life insurance policy, so for those having pre-existing conditions or who are in bad health currently may get denied or charged extra premiums. But enough with the examples. Let's look at an actual policy and how the cash value grows over time. Now here we have an actual policy from Mass Mutual. This policy here is a 15 pay, which means you'll pay for 15 years and then be done for the remainder of your lifetime. For the first 10 years, they are putting in $16,000 per year or $1,333 per month. And then in years 11 through 15, they are putting in $15,347. Now, if we look at this column right here, we can see exactly how the cash value will grow over the years. So as you can see, in the first several years, you'll actually have a little less cash value compared to the money that you've actually put in. But as the years go by, your cash value continues increasing and growing. This is the amount that you can borrow from in order to make other investments. And if we look at the column all the way to the far right, this shows the death benefit. When you're using whole life insurance for infinite banking, the death benefit is like icing on the cake. It's not what we're using the whole life insurance policy for, but it definitely is a plus to have it. And since with a whole life insurance policy, there's a limited amount of years that you have to pay, in this case, 15 years, the amount this customer has to put in is always capped at $236,777. However, we can see down the line over the years how their cash flow grows, continues to grow, and also the death benefit continues to grow. This specific policy came from Mass Mutual, but a few other great options are Guardian and New York Life. Now, a major key to getting this infinite banking process correct is to set up the policy correctly from the beginning. So you want to find a good agent that knows how to use this strategy so that they can set up the policy in the correct way for you. You want to get the most amount of cash value you can get with the least amount of death benefit. So let's do a recap of all of the benefits from infinite banking. 1, you get a guaranteed death benefit that is tax-free. All growth is tax deferred, and any loans that you take out are tax-free as well. You can borrow against the policy while the funds remain in the account and continues to grow. You can borrow funds for any reason, and you don't have to apply or qualify for a loan like you would have to do at a traditional bank. The dividend, current rates as of September 2022, range anywhere between 4% and 6%. Number 4 is protection against lawsuits. Most states have statutes in place that protect any dollar placed in a life insurance policy. Number 5, infinite banking isn't just about being your own banker. It allows you to lend or invest in other companies while charging them interest. This is literally the exact way that banks make money. Number 6, use it for personal expenses. If you're looking to buy a new car and need a loan, why would you get a loan from a bank and pay them 5% when you can borrow from your own bank and save that 5%? Let's look at how much money we can save ourselves when buying a new or used vehicle if we were to borrow the money from our own bank instead of using a traditional bank. So here we will assume that we are purchasing a $40,000 car with a loan term of 6 years at a rate of 5%. If we use a traditional bank, this is the amount of interest that we will pay them over time. And this is also the same amount of interest that you can save yourself by using your own bank instead of them. And I'm all about saving money. Infinite banking is an amazing tool that you can use to build wealth over time. If used correctly, you can easily build generational wealth. Make sure to follow me on Instagram at Money Talk Rashad, and make sure you check out this next video on how to quit your job and start a new business. Till next time, peace.